All right, welcome back to another cage match with Matthew Tuttle, myself, and we're going to beat down Cramer a little bit today. He top ticked a whole bunch of stuff, man. Oh. But anyway, thanks for checking us out. Thanks for supporting our channel, and we really appreciate all the likes and subscribes. And tell your friends. We're here every week, and we break down all of Kramer's picks, and we usually find quite a few decent swing trade setups out of it. I mean, we've been damn near damn near 95% accurate with our stuff every week. So if you like
Because
accuracy,
Cramer is damn near 95% inaccurate.
yep. I almost wonder if he even looks at the chart anymore. It's insane. Poor guy. We're going to bash on him a little bit. I got a couple kudos to give him, even though they're probably short lived. But, we give credit where credit's due. Let's just say that.
Yeah.
Looking at SPY, we've been seeing some volatility lately. And all of a sudden, one of my favorite ETFs to trade has been kind of popping up out of the weeds, and then they go and do an overnight reverse split on me. I'll get into that in a second. But SPY so far is just set up for a little bit more of a pullback and accumulation in this area. Can it be a long-term pullback for just continuation in this trend? Maybe. But if we start eating a mean reversion, man, I'd hate to see SPY come down to 473, 474 again. But I wouldn't hate it much because back here in this mess, I killed this. This is when Bullish Bears was really kicking butt as far as being down Johnny on the spot with all those bearish moves, man. It was so fast to make incredible trades on that thing in that bear market session. I would love to see one again. As much as I hate to see SPY come back down, a mean reversion would be insanely great for those of us who like scalping the crap out of the market, and that's kind of my bread and butter. So,
And those of us who like mean reversion trading.
heck yeah, dude, it's like shooting fish in a barrel. This becomes easy at that point. But yeah, I mean, be cautious here for sure. If you're long, if you're a buy and hold type, this is the time of the market where you're kind of looking at things a little skeptically on whether or not they're going to continue to go higher. And let me turn my drawings off for the moment. This doji here yesterday that we got on this news bar gave us the perfect mean reversion, and my plan was if it gave us a mean reversion of that bar, I'm going to start looking for some bearish positions. So I was around 516.50 was my target for a mean reversion, and it damn near hit it already. So be careful. We might be getting bearish here, and us bears, when those teeth come out, we bite and make it bleed. So, caution, definitely caution is something to be in the market right now, and that's kind of what we're seeing. The volume's starting to kind of shrink a little bit. We're looking at mean reversion of news bars pretty much on a regular basis, and then once this starts to roll over, if it becomes a trend, it doesn't take long for people to follow suit and start shorting it.
Just one thing I'd point out, be careful if you're really bearish here. And I wrote about this in my newsletter this morning. When the Fed called inflation transitory, they were totally wrong.
Yep.
And what that meant is they kept policy accommodative longer than they should have. Now the Fed is coming out and saying that, the conditions are very tight. They're just as wrong. And the thinking, I think, for the bulls is that the Fed, because they think policy is tight, are going to loosen regardless, which will probably be a mistake. But from a stock standpoint, investors are going to like it.
Very true, and that's the point. Is like good time to be cautious in the market, bullish or bearish. But once this thing starts to break and roll, it'll either roll down and mean revert, or it'll be just a pullback and an absolute buying fest. And you can certainly see when you see these reversion trades, there's definitely some greed still here. This was just an absolute buying fest. Today we had a little lesser one. Same kind of deal. So if we're seeing this as a pullback, which it can very well be, we know where the critical support is for, tipping the switch for being bearish or bullish. It's right there. I mean, it's plain as day. So yeah.
And remember, earnings start big time on Friday with the banks.
Yeah.
The Fed, whether they're going to cut or not, they're not going to do 6 times. So earnings are going to matter. So yeah, keep an eye on that stuff as well.
And I saw that article you shared on how the big banks are eating the regionals, and it's just plain as day on the chart. You can't
I,
you
I
can't mistake
mean,
that.
obviously, I've been pounding the table on the short regional bank trade. I mean, I'm talking my own book, but I launched Scree because I believe, like I believed when I did SARK, that that's going to turn out to be a great trade. And if interest rates go up, it's the shitcos and it's the regional banks that are going to take it on the chin. And so, yeah, I'm a big believer that you're going to see regional banks start to collapse.
Absolutely agree. And it's, unfortunate, but like we were saying about the consumer being a little bit overstretched on revolving debt, has a lot to do with it, but it's a matter of also the policy changes are kind of in the favor of the big banks to do it anyway. So when in
Well,
Rome,
and the big banks, remember, are too big to fail.
right?
So, Citi, JP Morgan, Wells Fargo, they can have issues. They're not going to be zeros. If those go to
Right.
zero, we got bigger problems. You better have a bunker and some spam.
Yep.
But the regional banks, nobody gives a crap about those guys. They can go to zero.
Yeah.
And it can happen very quickly. I can move my money out of a regional bank into JP Morgan, in a matter of seconds.
Yep. And it's just basic consolidation. We see it all the time. Any sector can be consolidated, and regional banks is certainly high on that list. We saw that with a lot of the what was it back in 18 and 19. We saw a lot of the oil companies basically being eaten up, all the little guys, and same thing, just consolidation in a sector. Um, One of my other favorite ETFs, and I know you're an ETF manager, so I hate to throw these at you, but UVXY is a fun one, and by no means is it a buy and hold ETF. It is a depreciating asset. You can clearly see that on the chart. They did an overnight 1-for-5 reverse split. This has been one of my favorites for day trading. It is specifically because it's easy. The charting on this thing is just gravy to figure out. And when you do a side by side with SPY or even QQQ with this thing, it's just basically an ETF based on the VIX. Well, when it was trading yesterday at like $6, $7, $8, that's easy. You go and grab some bulk of that thing, and the chart's just methodical. You get measured moves, you get halves, reversions, pretty much everything across the board is right in play on this thing very readily. We have a setup for a nice bullish measured move. It met the half target right now, came up right to that 36.70 previous wick. This is adjusted, mind you, because of the split. But an outside move on that thing, if volatility keeps piling on, and we're looking at a couple Fed speakers coming out later today, and some mortgage rates and stuff like that coming out, we may see an extension into this thing. And goodness, man, 37.80 is a hell of a target, but it can happen. Look here, there's your bar.
So, UVXY is one of my favorites as well. And so, a couple of key points on it. It's not based on the VIX. It's based
No.
on the VIX futures,
Right.
which is extremely important because of the roll. So UVXY, I mean, if you look at a long-term chart of it, you'll see is designed to go to zero.
And it eventually
What you
will.
never want to do is outright short it or outright short options on it, because every once in a while you can have a Volmageddon incident and people who were outright short volatility got carted out in stretchers. What I do with UVXY is whenever it spikes, I buy puts, because
Yeah.
the cool thing about the market can go up and doesn't need a reason to keep being up. So SPY can go up 2% today, and if nothing happens tomorrow, it can be flat. It doesn't need to retrace that 2%. Volatility needs a reason to stay elevated. So VIX could go up 10% today. If nothing is going on tomorrow, it's not going to be flat. It's going to retrace a lot of that move. So I love buying puts on it when it spikes, and I go long. I go long VIX calls because they don't have the roll risk, but UVIXI is fine too. I go long that when it's ridiculously low. So I personally would. Yeah, I wouldn't be going long. A day trade is a whole different story. I'm
Right.
not a day trader anymore. I don't have time. I wouldn't be swinging UVIXI long today.
No.
If anything, and I'm already short, and this whole reverse split, Schwab isn't accounting for it correctly, so it's showing my account worth a whole lot more money than it actually is. I put out a limit order to sell, but just in case I get lucky and some idiot fills me, but I know they won't.
Right.
But yeah, if I didn't have UVIXI puts, I would be buying UVIXI puts right now.
Yeah, one of our members was running that same scenario. He went long for an overnight yesterday and woke up and saw the numbers. Like, holy crap! He's like,
Yeah.
oh, steak dinner. No, no, not yet. Wait for it, man. But yeah, it's been a pretty easy chart. We got the nice 1-for-1 swing on the open, pretty easy. Coming back for mean reversion right now. Hit the half target. It can extend higher, but yeah, absolutely be ready to short this thing when it hits that spike with puts. Do not short it directly. Solid advice on this thing. Where the heck did that noise
Yeah,
come
I
from?
mean, when Volmageddon happened, and a lot of your viewers probably are too young to remember Volmageddon, but that trade was really, really crowded. People were making tons of money, but it's picking up pennies in front of a steamroller,
Right.
and a whole lot of people ended up going to zero.
Yeah, margin call city, I think it was. Yeah, I remember that. I wasn't really trading this back then, but yeah, it was pretty fun to read about. I know that. But this is one of those easy day trades. I just love day trading this thing, and I'll literally just run a comparative chart with the S&P and roll with it because it's pretty quick to give you signals for trading the S&P as well. It's almost like it's not quite the VIX of the VIX, but it moves a bunch more smoothly than the VIX ever will, as far as I'm concerned. I can go into
Well,
the
one thing I do too from time to time is I'll use a credit spread on SPY calls to pay for UVIXI puts. And I'm not doing it to generate income, which I know you guys do on the wheel trade. What I'm
right,
using it for is if I'm wrong and SPY goes down, I don't lose any money. I don't make any money.
right.
Now, you need UVIXI to really crater to make money on that trade. But, it's a way I play it every once in a while.
It's almost like a super economical collar strategy, really. I mean, you're just hedging yourself. You can win capped gains on that, or you can break even. So it's pretty much a draw.
Right. I mean, every once in a while, I like to put on a trade where if I'm wrong, I don't lose any money.
Exactly. That's the whole point. And there's many option strategies to run with that, but doing it across two different things is actually smarter because you can do it for less. You
Right.
essentially
And
hedge
two
yourself.
things that are correlated, like SPY and VIX, will tend to be.
Right. Awesome stuff, man. Great minds. Looking at a couple of things on Cramer's list now. We've got some stuff to talk about. Ugh. He said sell a couple of them, and I'm going to start right off with the elephant in the room. He told people to sell BTU, and my gosh, everybody and their mother with any real money on the table bought the crap out of that dip. Would I say this is a good swing trade to go long? Sure, but you got to realize this is going to be something where it's an eventful thing. And when he said sell it, kudos for about 5 minutes. And then all of a sudden I saw the buyers come in. I'm like, man, I wish I could have bought that dip, but I missed out on it. Back in the day, I did wheel trade this thing quite a bit, but now it's just kind of hanging in a zone where it's just got a giant wedge forming. I mean, here's a monthly chart to see the darn thing. So there's some angulars in here. It's staying in a range. Swing trade it. It's a decent swing trade. I do love swing trading this thing still. Would I wheel it again? It's a bit expensive for wheels because the yield isn't great for the premium selling on it, but it's still feasible. I mean, it still can average, a little bit above 3%, 4% monthlies on natural yield. So it's worth doing if you're bold enough to carry a position on this thing. But I call this the fuel supply for our EV sector. It's essentially what it is. Until you
We don't have the technology to make coal go away.
right, and it's just not not something that's going to be going away overnight anyway. And yeah, it's been a great swing trade. Back here when we had this massive sell off on me, and sure, yeah, they were getting pretty gung ho on all the. I coined the phrase "enviro Nazis" were beating the crap out of coal, but dude, it bounced like a ball when certain someone decided to tell you, "Hey, it's not going anywhere." Here we are. Truth was told. Um, so yeah, I gave him kudos for like literally 5 minutes. It's just
I don't know what that dip was all about. I mean, I own it personally. I like trading it. Of all the coal names, it's got the best volume as far as I can tell and the best options. I mean, it's a crazy choppy chart, but I mean, nice undercut and rally on a couple of important lows too.
absolutely. And yeah, I mean, it's just when you get those quick strong moves, man. It's just every every institutional trader's dream when they see that stuff. I mean, that's just absolutely let's buy the crap out of this. We know where it's going. Basic mean reversion made a half step down, bounced right off of it. Mean reversion comes to 24.20. Easy peasy. Would I buy it here? Nah, I'd wait for a little bit more of a consolidation. But if you bought that dip this morning in the pre-market, you are sitting
Yeah,
pretty.
you'd be a happy guy buying that dip.
Absolutely. So yeah, Cramer, kudos for 5 minutes, man. He also said to sell a couple others that were a little bit interesting. This one, SOUN, Soundhound. I don't know much about that particular equity, but I guess it's an AI type of thing. Basic mean
An
reversion.
AI thing, I think it was a SPAC at one point.
Uh,
If I remember correctly, and I may not, but it looks like it from the chart. It's one of the only D SPACs that's not in the ones. So
yeah, it's,
that's interesting.
it's almost holding four. I was talking to some of our members earlier. I'm like, this is basic market structure here is pretty easy to see. Your range bar right there. There's an event bar. We're likely to visit that about $4. Maybe give it a little bit more of a slip below $4. But so far, decent short. Okay, I'll give Cramer a little bit of chips on that. But selling it here, it's almost like a bottom tick. It's pretty obvious to see that range bar. I wouldn't want to short this here. If you were already short, it's probably likely that you want to take profits around $4 anyway. But if it does breach $4, sure, we could see it down to maybe at least halfway to $1.60. Say about 240 would be a reasonable target. If it starts to break this level, you can see the doji party and the gap's pretty obvious. Can it be a short later? Sure, I'll keep an eye on it. But for now, I wouldn't sell it yet. Short here. If you're already short, you're already looking to take profits if you're smart. Just my opinion on it. Not the most interesting chart otherwise to day trade or anything like that.
No.
You know, I tend to focus on day trading when it comes to stuff trading at this level, below $10. It's like, yeah, scalp it. It's what it's there for. But in this case, yeah, I'm not that interested in trading it for that matter. A couple other mentions. He was short this guy here, HZO, Marine Max US. Pretty obvious measured move. It's just about nailed his target. You can see all the bears are taking their profits. Okay, kudos on that one. Good sale.
Yeah.
Would I continue selling it here? I would be cautious because it's going to probably find a whole bunch of buyers if it touches that 2680 level. Just kind of
Yeah,
forewarn you.
and where do we got? We got a couple levels here. 2645 is one. 2603.
All in the history. Every wick you see on the bottom of that range is pretty much where all the buyers are waiting. So yeah, um, I might be inclined to watch this one for a good long position later on. But yeah, definitely pay attention to this guy if you're into trading decent swing trades. I'm going to put the liquidity zone right there. It's pretty obvious right on the daily chart. So watch the levels. Pretty easy one. Pretty easy setup. Mean reversion target $30. Be a pretty decent swing from 26 or 28. So keep your eyes on it. I'll give Cramer a pat on the back for that one. He did good selling that one. Let's see here. ACHR was another one. It's another aviation stock. If you remember back in the day, we talked about K-MAX helicopters type of stuff. Same kind of deal. This one's sitting right on angular support. You can clearly see it here, but it is a bit of a top-heavy chart. Nice big old double top. If it breaches this, sure, it can start filling in these ranges back here to like 320 and maybe even down to $2 again. But if it holds this angular support here and starts to bounce, that's not a bull flag, but this is more of a descending wedge. Careful if you're going to try and long this thing. Okay, I'll give kudos for selling it, but aviation companies, they can become volatile for like literally no reason. They get a good news pop now and then.
And remember, I mean, this and Soundhound are both, the shitcos.
Right.
And, if rates go up, that's going to impact these names. But once, when you get animal spirits going and the retail guys pumping stuff, that's when these names move.
Exactly.
So, day trading, fine. I mean, these are tough names to swing short. So yeah, just be careful.
They're probably expensive to borrow too if you're going to short them. So
I would think.
Yeah. I'm looking at maybe a chance of a reversal for a quick reversion of this news bar here. But for now, I'll give Cramer the kudos for the moment for selling that one. But watch for a quick retrace right back to about 429, 430. It's kind of underway already. So day traders are pretty much getting this one. Would I be interested in holding any for a swing trade? Probably not. It's just one of those. But it can get into reverting back into at least the middle of this range, and it can make some swings. But I wouldn't put a whole lot of risk in something like this. It's just my style is to be risk averse when I can. This is one of those. Should we go into the buy list? Because he top ticked a whole bunch of crap, dude.
As is usual.
Oh, man. Let me go. He's got 11 in the list here. Starting with uranium. That's been a tricky trade for a lot of people if they missed this trend. That boat has sailed, and now we're consolidating in a range. What's your take on uranium? I mean, I know it was popular for a while there.
Yeah, CCJ is a name I like to trade. And if you look at that chart, depending on what types of stuff you look for, that could be a cup and handle, could be a punch bowl of death.
Right.
I wrote it up. I'm not in it at the moment. I don't like just, necessarily cup and handles. So I'd be cautious with it up here. I mean, UEC is a smaller name. I mean, maybe, but CCJ to me is the beast. But I'd look for it to come down a little here. I don't like this pattern. It almost looks like it's going to form like some sort of triple top or something.
Yeah, it's a bit extended here, so it's kind of due for a pullback anyway. Definitely be cautious on that one. And then
And I got some guy attacking me on Twitter right now.
Oh boy! Want to go
First he's saying I laughed off inflation while it's crushed the middle class and poor.
Yeah.
Then he's saying I support massive deficits that crush the middle class and poor. I mean, I'm not even in government here, and
Yeah.
I don't actually. Tuttle supports propagandists. Okay.
Yeah, because that's where the money's at right now.
Yeah,
I mean, it's hilarious to have people just come out and start smacking people around. For nothing else, it makes them feel good about themselves when realistically their lives are probably miserable. It's just the whole bully scenario.
Yeah.
Why the hell would we give a crap? We just laugh at that stuff. We're Gen Xers. It bounces right off of us, man.
I mean, it's some dude who's got 141 followers. So
All right. I might jump in on your Twitter and start messing with them just because it's fun.
Yeah.
I like being from my generation, man. We don't care. We love just getting and stirring the pot for the hell of it. We don't care if we're right or wrong, even. So don't
Yeah.
mess with us.
No,
I'm kind of looking at the whole uranium scenario. Yeah, definitely take some caution. Can it come back to the zone with UEC that he was saying buy? Dude, I think you might have top ticked that a little bit because that
yeah, I mean, again, looking at CCJ, when it undercut and rallied at the 200 day, that was the time to buy it.
pretty much all you can say. I mean, now if you missed the boat on that, just be patient. Don't predict. Definitely react with this one. You don't want to.
And yeah, and also, I mean, as I'm looking at it, if you are a cup and handle guy, let the handle form and see if
Exactly.
you get a breakout.
And it can. The UEC is not exactly the same on that one. It's just more of a consolidation pattern, but it's right at the mean reversion pivot. And this morning it opened up. So, Cramer said buy yesterday. Obviously, people chased it, and bam, they got spanked. Right back down for half that, wicked it, bounced up a little bit. We're getting basically buy to cover and some new money in the mix here on this candle, pretty obvious. But if it hits that 720 line and rejects, dude, that's going to be an epic short for somebody. So just be careful on that. Um, in comparison to the CCJ, I mean, it is a cup and handle. You look at the continuation on that, it can, but it's like, why risk it if it's not going to break resistance? You kind of shut that idea down. But look a little deeper in this thing. Um, Monthly chart, that trend has been strong as hell, but the volatility, it ranges real easy. Right now, that's a range bar, baby, and we're at the top of it. So much more likely to come back and revisit half of it, or maybe even find a low and start to consolidate into a giant flag like we see here, than we are to come out and exceed this and just blast off. So yeah, don't chase. Wait patiently for the next setup, and it'll come to you. You don't have
Yeah.
to jump the gun on this thing like these guys are doing right now. So be cautious in that sector for sure. Um, I'll end this thing with Trade Desk because we had some things to say about a certain other broker maybe towards the end of the program if we got time. But
Oh,
I'll
yeah.
I'll skip that one and come back to it. One of the things I like to look at, and I've wheeled this one in the past, but now it's more of I like to trade spreads on it because it's a bit more expensive than I like to yield or like to risk on a low yield premium. I'm looking at Signet Jewelers and thinking all I can think about is referring back to a whole bunch of retail revolving debt, general public consumer being very stressed right now. And I love the jewelry industry because I mean they do have a lot of flow, but would I go and be bullish on this thing? This was on Cramer's buy list. I don't know, man. I'm gonna wait and see what it does in this range first. But can I say in the long term it would be an investment? Damn, dude. I really, really worry because the consumer is just like pressed so thin right now. The paycheck to paycheck crowd is gonna have a hard time buying jewelry right now. That's all I can say.
Yeah.
Um,
I
can this thing be a reversal and maybe we short it? Watch this range bar on a monthly chart. It's pretty obvious. It can hit 82 in no time. So um, I think they're coming out with earnings in the next quarter. So it's got some time to consolidate for a while around this range, around 97.50. Maybe it'll be some decent swing trades, but for now, I think we're looking more bearish than bullish. It tripped the red line here. I have plotted out just previous resistance. We can see it.
Also, it broke below the 50-day today. I mean, you could short it and use that as a stop.
Yeah, pretty easily. I try to keep my moving averages to a minimum so we can clearly see the chart, but the 50-day is right around where it's just above where it's at right there. Can we see it hit 97.50 for a bear target currently? Yes. I mean, we could see that today, but breach that, a good swing down into this liquidity zone around $95 is pretty reasonable. So I'd say there's going to be a lot more people bearish on this thing than bullish. and at least in the midterm. Few other mentions, and I'll kind of breeze through a few of these because some of them I didn't like the chart at all. But SLB here, I have no idea what these guys even do. Schlumberger.
They're an oil and gas company. I'm not a relative strength guy necessarily, but when you see all the other oil and gas companies look like AI stocks and this one looks like crap, I do wonder about that.
Oh, for sure. I can see there's a two-page scenario here. So one, on the daily chart, we're tapping liquidity here. We can see there's going to be some buyers here, but if they melt, it's a pretty easy reversion trade. So we could see a move down to like $50, $51 pretty easily if it breaks this zone. I never like to short this pattern, and this is essentially a rounding top, or if you think about it, it's a not necessarily an inverted cup and handle, but if it were, this is where you'd expect it to come back into a quick retracement of the current range bar, and that's the daily bar here. Can it pop back up to $53, $54? Sure, it can do that really quickly. And trading in a range, easy marks. All right, we got sellers here, we got a mid zone here, and we got buyers here. Simple as that. Buyers are taking this up, so if people shorted it this morning after Cramer said buy it, that's a top tick and a half, baby. It's ripping down. Can it end up giving a quick day trade back here? Sure, it's a great day trader. For now, if you're a swing trader, wait this pattern out. It'll eventually break and give you either a really good short or a really good long. You just have to wait and see.
So right now, I have puts on USO, which is the oil ETF. I like to short that or via puts because it's not like UVIXI, but it's also structurally inefficient. It's got the
Right.
roll risk as well. Also you see the oil and gas names and oil looking toppy. What people always seem to knee jerk to turmoil in the Middle East equals higher oil prices. Theoretically, that's true. It should. But if you look back at, all the flare ups, it really hasn't.
Yeah.
So, we'll see. I mean, if we have full scale war between Iran and Israel, I mean, does that spike oil? Maybe it does, but I don't think you can sit there and say, "Oh, definitely," and just long oil based on that. I'm not as short term as you, but I'm short term. I may be out of my USO puts today, but just don't automatically assume Middle East turmoil equals higher oil prices.
Good point. And that's, the makings of if you're invested in something long, USO becomes a great way to collar your strategy. So that makes sense. And yeah, turmoil will cause a little volatility in the price, but generally they tend to balance. They eventually settle. You can almost say it's like it's manipulated somehow, but it kind of is and isn't. I mean, prices tend to balance. So, like, when
I would assume that oil prices, I mean, if you look at, all the different things we trade out there, I would bet oil prices are pretty high up there on the scale of manipulation.
I agree, and it's a you can think globally, act locally all you want, but it's going to be a very easy to balance and manipulate market. And the idea is to try to stabilize things, similar to the Fed trying to control inflation to stabilize a currency. Same kind of deal. And we all know that you can't have a booming economy without affordable energy. So that's the number one goal, is to stabilize that. So yeah, it's pretty much like that. It's unfortunate for investors, but it's sometimes very gratuitous for traders. So when there's volatility in it, trade some options. You cap your gains a little bit when you're doing spreads, but when you're straight on it, you can use it as either a collar for your long-term investments in the refiners, or you can use it as a means of generating some sort of cash flow in your account to maintain that long position with a little security, so to speak, generating income on your trades to shore up your long-term investments. there's a lot of refiners out there that can kind of take advantage of that, and the refiners themselves will hedge in futures on oil the same way. So it's kind of an easy thing to look to.
Yep.
Um, he had a few others that were just mind-boggling to me, and I can't remember. There's one of them right here. MNMD, this mind medicine one. Dude, that's probably the easiest measured move setup that we've seen in a long time. And it didn't quite spike the top of this booger here, but it was just a range bar setup for giving half above short. And then he says buy it. Of course, people chased it yesterday, and today they're getting hosed. So where does this settle? About the mean is the base of the news bar from yesterday. We're looking for a push down, maybe a little bit lower to like 980 or so. If it breaches this pivot point here at 960, this might be a decent short and run lower right down to about 880 or so. And the daily chart, it kind of makes sense to do so. It's just the mean of this shuffle here. So possibly an
Yeah,
easy trade on
and
this one.
I know nothing about this company. I mean, I don't necessarily like this chart. I do think that psychedelics have, and not from experience, have the possibility to be a game changer when it comes to mental health issues. I don't think we're anywhere near there. And again, I don't know this company. I don't know
Right.
their positioning in it. But I will give Cramer kudos for at least calling out this industry, because I think this is an untapped potential here for some interesting treatments, because I do believe that the existing treatments we have for anything mental illness have profound issues.
Yeah, I
So
mean
we'll
the
see.
side effects in them alone are just ridiculous. So yeah, going into the psychedelics for mental health is kind of a no-brainer, really. Um, so I give him kudos for being, and this is one of his favorites. He tends to talk a lot about this one. Um, Market structure, we can see, looking at the monthly chart, done its thing. It's consolidated forever, and it's starting to make some moves. This is more than just a short squeeze here. This is possibly a trend reversal, and maybe even leads to a mean reversion in the long term. So for investors, okay, I can give them kudos for the buy order on this one for long term, but for short term, man, when people went chasing that thing on news that someone said buy it, this is where short sellers took over and just ripped it right back down. Can it get back above the top of this bar here and start to gain into a bullish trend? Sure, it can. Just in the meantime, it's an interesting one for day traders, and a couple swing traders might take advantage of that too. I haven't looked at the options chain on it, so I don't know if it's worth doing spreads or anything like that on. But
I would doubt that this doesn't look like a name that's got a robust option chain to it.
no, I highly doubt that. So, yeah, I would say it's probably hands off for me. It's one of my less interesting things. But if you want to day trade some equity, it's in the $10 range. It's a good scalp for people with smaller accounts. It's a good scalp for people with some experience. But as far as long term stuff goes, it's not that interesting to me. My long term though is different than yours. Mine is like maybe weeks at most. Some people are like decades. So decades,
Yeah.
sure, this thing could swing and just rip a face off if it's a good structure to be in. Okay, long-term investors might take over on this one. Moving on, Honeywell, an old hand. I never really liked trading this thing, and I probably never will. Short term, I can say if he's saying buy it, I'd be a little bit nervous about that top tick. Certainly, it's pretty much shown that up. Would I buy it here? No. I want to see if this little measured move plays out, because it's pretty easy. We're in a consolidation. We're teetering on the line for this could be a decent short for a couple swing traders, maybe even as low as 191. I would probably swing for a meeting target 193 would be more reasonable.
I mean, it's right on the 200-day moving average. It could go either way, but I mean, I don't, whether you short it or go long, I don't see that your profit potential is anything to write home about here.
Yeah, no, it's not worth the squeeze in my opinion. It's like I said, it's
No.
not one I like trading. If you were into it, sure, okay, you can make some moves here, but for now, I'd wait for the break. Don't trade that setup. That looks like just a doji party of doom. So,
OG Party of Doom. I like that.
It's like seeing a bunch of people stand tall in a circle around you, and you're the guy in the middle laying down, looking up, going, "Oh, about to hurt." Doji Party of Doom paints a picture. Moving on down the line, he said, "Buy Dorman." That thing is choppy and ridiculous to trade, but it does have its moments for the long-term swingers. And, it's made a beautiful one-for-one up. It's getting ripped back down to a point where it's at support. Can it hold here? Sure, it can continue a little higher, but overnight,
Yeah.
guys, I don't know, man. That's just a little bit sketchy to me. And he said, buy this yesterday. You can see pre-market chased it and then got spanked. I would wait.
Oh, go ahead.
I would wait on this. This is definitely a top tick for the short-term people. See if it settles around $90 and maybe starts to continue as if it was a pullback. But look left, folks. We've got the choppiest, nastiest chart for traders on earth here. Investors, I wouldn't touch this thing with a 10-foot pole if I was an investor, but that's just me.
No. He's been on a small cap kick lately, so every night he's giving you like 5 small cap names. I got to figure that's going to be his worst calls. I mean, Nvidia, Apple, all that stuff. I mean, kind of hard to get those names wrong.
Right.
But smaller cap names, you actually, ought to do a little bit of research, and he's not. So yeah, I'd take his small cap longs with a grain of salt or a grain of short.
A grain of short. I like that. And yeah, it certainly was a great short opportunity if you wanted to short that in the pre-market. You made a few bucks, but I mean, again, it's such a small movement. It's nothing to write home about. It's just to take advantage of the price action while you got it. But God, that's some ticky-tacky garbage to trade, man. I don't have any interest in it.
Yeah.
Dorman Products is one of those. They're in the automotive industry. Their aftermarket parts are like, I don't want to get myself in trouble as a former mechanic and say they suck. They don't. They're kind of mediocre though for an aftermarket producer. There's some better ones out there, but they do tend to focus on being the first to come out with an aftermarket solution. So like when your manufacturer's parts come out, with exorbitant prices attached to them, particularly in some of the imports, Dorman can be a life-saving company for you. I mean, you get typically about 50% of what the manufacturer parts cost is typically where their price points are, and they're really good at that. They're really good at coming up with solutions quickly. But as far as quality of products go, I know there's a few other aftermarket producers out there that I would absolutely prefer over these guys, just from my experience as a mechanic. That being said, it's one of those companies where I don't know that I would be touching it with an investor's outlook. Even as a
No.
trader's outlook, I'm just like kind of It's not an interesting company for me to trade. I'd rather go trade Ford than this. Let's just say that. Couple others, and this is I think Chipotle realistically needs to start talking about a huge forward split, man, because that is such an expensive stock to trade. It's ridiculous. But if you're a one
Well,
share,
they are going to split. So I don't know when that takes effect, but they are going to be splitting.
I thought they were saying June or something like that, but it may be sooner.
Yeah, I don't know.
But it's definitely one of those that needs to split. But in the meantime, I liken this to a couple of other big stock prices I like to trade every now and then, and I'll trade a share or two because they'll move in hundreds. I mean, you throw in some money that's basically parked there for a day or two, and it makes a few $100. It's a pretty good, easy overnight park. So swing trade them as you like. But I mean, geez, man, trading at around $3,000 a share, retail is not going to be interested in that unless they got some bucks,
Right.
But in the meantime, the daily chart has a pretty nice little cup and handle setup. This is where I'd expect a handle. I marked out the measured move on that for the breakout setup, but I might be going smaller time frame in this minutia to see where this rounding top is going to provide some shorter term trades. And then the weekly chart where I got this massive 2-for-1 on the board here that's still in the marks or in the play. Um, can we see this breakout higher than the half point of this third move here? Damn, dude, 3,000 is a big number. So, take that with a grain of I wouldn't chase Cramer's money into it, but I'll give him kudos for saying buy it. It's so far holding up. Smaller time frames, we could be looking at this as our news bar, and then exceed 3,000 by about $10 in the meantime. Sure. I compare this to my other $3,000 stocks. I mean, back in the day, I was day trading Amazon shares when it was trading around 3,000. Particularly during their earnings calls, I'd be in and out on the 10-second chart. But something like this for swings, sure you can, but I mean you got to have a few bucks in your account. You can't be just some $300 account holder to mess with this thing. Retail is going to love the day that they do that forward split though, so be on the watch for that, because when that happens, you're going to see some volatility like you've never seen before on this one particularly. I think this has meme stock potential written all over it later on. As far as others in that sector go, I don't know about. There's a few restaurant brands that are out there that are tradable and much more reasonable, but the price action on them kind of sucks. I like CMG.
I mean, Kava's another name he likes. I mean, interesting bounce off the 50-day. I mean, the time to have bought this was November. Same with everything else, but
yeah,
I mean, I don't know if you've ever been there, but it is. I mean, if you like Middle Eastern food, it's good stuff.
It's decent. I do like it. I occasionally will get a plate or two over there. As far as price action goes, it's had beautiful follow through. We've seen the measured moves pretty much stack up very nicely in that. As you've seen in the past, we've been blocking all over this thing. Right now, though, I think it's consolidating a bit. This little descending channel here is likely to make a quick mean reversion, maybe to about $67 or so. But for day traders, that's kind of I wouldn't chase it much higher than yesterday's high yet until we get some confirmation to go higher and start seeing those numbers. But this thing is awesome for traders and for investors. Yeah. Dude, yeah, that parabolic move is just massive. But be aware that this is something that IPO'd back here in June of 23, and market structure hasn't done anything with this parabolic trend yet. So this is where you're looking for a little caution. Can it go higher? Absolutely, it can rip a face off to $3,000-$4,000. Who the hell knows? But in the meantime, market structure tends to play its role here, and we're in that stretch where maybe we could start seeing this thing fall back to the 40s and accumulate for a while. It's possible. So just be a little bit a little cautious if you're going to be a long-term buy and hold on this guy. However, the option chain is actually pretty good on this one, so I do like it for trading. Definitely got some potential there. Couple other things to talk about. Let's see here. Brinker was one of his. I'm looking at it like it's a decent short, at least to $45, but that might change. This is one he said buy, and he topped.
Yeah, watch the 50-day. It's 13 cents below right now, and to me, it looks like a short here. But the last couple of times it hit the 50-day, it bounced. So not if this whole market rolls over, then forget it.
Might go with it. Yeah. It's one of those ones where you're patient, trade the break, not the setup. It's set up for a nice bearish measured move on that big old range bar up there, and there's some liquidity. You just trace it back to this bar here. It's pretty obvious, around $45. It can be an incredible short for some. Just be a little bit cautious on waiting for the break on that one before you just jump in. Couple other mentions. Boot Barn. That's a stock I love to hate. That thing has just been, let me go to the monthly chart. Market structure, same thing, pulled back. Mean reversion was a great trade, but afterwards it's like, I just don't have any interest in trading this thing.
A 16-point move in a month for I don't know this company, but a company called Boot Barn.
Yeah.
It's up $16 in less than a month. I don't know. Not my thing.
No. And it's certainly got a potential to trip this zone and say maybe revert back here to 90 bucks. But I mean, it's a $10 move possible for a quick scalp on the Bears. But Cramer said buy this thing, and there's some accumulation going on here. So this conversation will either end with it's a pullback, let's go long, or no, we're going to take some profit now and capitalize this thing and run it back down to 90. This conversation will be over with soon. Let that consolidation break, trade the break, not the setup for sure. Last but not least, I don't know this company either. Golf, no idea what they do. I didn't care to really chart it, but it is in a range. Would I have bought it here? It's a decision you can make for an investor to maybe say it can go to like 64, 65 bucks from here for short term, medium term. Can it hit 70 again? I don't know about that. I want to wait. Again, market structure. Look out. It's pretty much at a very extended high, and those tall wicks on the monthly chart usually spell I'm about to go and take a major pullback. So definitely be careful if you're interested in this thing, but it does look like it has potential to range back in this a little bit first. But if it trips the wire here and gets below 60, watch out, because that's a pretty quick fall down here to like 58 bucks, 57 bucks. Should we talk about the last one, Trade Desk?
All right.
This thing is set up, I mean, sure, overnight. Yeah, Cramer, good for you. Good buy right there. It bounced right off of key liquidity. This is the red zone where if it tripped this, I would say it was a good short. It wicked it, bounced right out. Okay, we had a pullback. We're looking long. Got to break this previous high of about 87, 88 bucks to really go anywhere though. So I mean, long-term buy and hold, I'd be a little nervous right here. Day traders and swing traders did well. Wait and see if this thing sets up, because if it trips this zone, man, that gap is pretty quick. And this low, pretty set in stone for support here. Can this thing just give us a quick 1-for-1 and rip a face off to the upside and hit like 95 bucks? It's possible, but
yeah, a lot of resistance, but also sitting on some support. If the market rips, I wouldn't mind going long this name if it can break through the resistance there.
yeah, it's kind of right on deck. I mean, it's got that potential. It can do it. So I give half a kudo for this one, because when he said buy it, it hit a hell of a low. Okay, it came back and boosted. Definitely give Cramer some credit for this one, but careful with this resistance, and it's angular in this case, where you got that descending channel here. Watch that $87 bill, because if it breaks that, cool, it can run up. But if it rejects there really hard, we can return to this real quickly. So liquidity is pretty easy to see on this chart. We were talking a little bit about Schwab here getting some heat from some managers here. Should we elaborate, or can we maybe keep that on the down low for a little while? Kind of up to you.
Yeah, I mean, well, you brought it up, so we can elaborate. So yeah, I mean, what the big platforms, Schwab, Fidelity, all those guys do with mutual funds is mutual funds are pay to play. So if I'm a mutual fund manager, for me to be listed on their platform, without a transaction fee, I've got to pay them money.
Right.
ETFs have always been like stocks. I list an ETF, you can trade it freely on all these platforms. Fidelity's going after that pot of gold. So they've announced a pilot program on 9 ETF families, not me right now, which is good, where the ETF issuer can either pay them 15 basis points on everything they have on their platform, or they're going to charge a $100 transaction fee on all transactions on their ETFs. And I believe the intention is to roll this out to the entire universe of ETFs.
Wow.
Yeah, I mean, it's going to be a pretty big deal.
So I mean, you got to wonder, why are they willing to lean on the people who are holding places in their platform so hard to get what they want? because it's clear that they want the basis points out of that. But then they got to try and beat you guys up. I mean, that's kind of crappy too.
I mean, I agree. I mean, there is a dichotomy between ETFs and mutual funds. They make money on mutual funds on their platform. They don't make money on the ETFs.
Right.
I would argue if you're going to be a platform for, the individual investor, because the brokerage firms are all pay to play. Like
Right.
my ETFs are not listed on a brokerage firm platform because I'd have to pay an arm and a leg. But you expect that when you go to a broker. The Fidelities of the world are supposed to be, open architecture. So anything that lessens that architecture, I don't like.
Good point. I mean, it's a bit of dirty pool for sure, and it's just it kind of leaves a bit of a bad taste for both parties. I mean, where does this settle? I mean, is there any kind of compromise that might come from this?
I don't think so. I mean, fidelity is fidelity. So, they don't care.
Yeah.
They're going to charge it, and it is what it is, and it's not. I mean, I don't think it'll affect their bottom line. Guys like me will have to decide: do I want to pay basis points, or do I want to be charged on their platform? One thing I don't know personally is how much assets we have on their platform. So I may
Right.
just, when it comes around to me, I may just tell them to screw. We'll see.
Go pound sand.
But what could be interesting is, do other places do this? And then what happens is the smaller ETF issuers get squeezed. The BlackRocks, the State Streets, those guys are going to be fine.
Right.
But do they squeeze the guys like me, which, it's possible. I mean, I know the Bloomberg ETF editors very well, and they're hearing rumors, and they keep coming to me. They're like, Matt, have you heard anything? I'm like, no, what have you guys heard? And
Right.
then this Fidelity news dropped. So they were asking me months ago whether I heard anything, and I didn't. And then this dropped 2 weeks ago.
Right. I don't know, man. It's going to be interesting to see the outcome from this for sure. And yeah, I'm a guy who doesn't put a dime in any of those investment parties anyway. I manage my own, so it doesn't affect me much, being in a broker side. But as far as the spin out on that later, um, I know that a lot of investment firms tend to do other things than just, buy whatever their customers are telling them to buy, or sell whatever they're selling, for adjustments. But in the end, everybody takes a hit from this, no matter what the outcome is what I'm getting, and that's kind of crummy. I hope it doesn't bleed into the brokerage side of things. I don't think it will, but in the meantime, it hurts a lot more people than it helps. So it's
Yep.
kind of dirty pool, man. Hopefully, people will pick that apart though, and make their own decisions, and do a little bit more diligence on where they manage their funds. If they're
Right. And
just,
and also, I mean, I think if you're smarter and you're an active trader, you're probably not using
yeah,
Fidelity.
I don't use Fidelity, so
I don't either.
I haven't had an account with Fidelity since I had a 401k, and that was back in like the late 90s, man. So I'm done with 401ks as of that point, and I'm trading for a living now, so I don't have to care. But I know there's a
Yep.
lot of people who don't have that luxury. Working a full-time job can kind of put the kibosh on trading, or even managing your portfolio. So I understand that. These firms have a leg to stand on for that, because there's quite the consumer audience out there for it as a product. But I gotta wonder, at what point do people become a little bit more reliant on themselves for managing their funds? And there seems to be a bit of an uptick in that market. So is this a grasp for straws to hang on to the people they have, or is this going to be a kick in the teeth to get rid of them? Who knows?
Yeah, we will see.
Oh, it's going to be some interesting stuff in the future, that's for sure. And the financial space is making some big changes in many other places too. We can kind of see that. It's we're making history at this point. And one of the things I've noticed is, platform wise, you've got a lot of proprietary indicator platforms out there that have done really well in their beginnings, and then they kind of the market adapts to them, so to speak, and suddenly their success rate kind of diminishes over time. I just wrote a review for a platform called Big Short, and essentially it's a platform I see as being adaptive to market conditions, to where it's a proprietary indicator platform, but it's got the ability to stay with the market beat and roll with the punches, so to speak. You look back at some of the other proprietary indicators where they were really popular for a while, they were really successful for a while, but the more popular they got, the more it influenced the market conditions, and the more the market conditions adapted to them, and the less successful those outcomes became. Their accuracy rating went down. Us price action guys, we can go and take our technical analysis to pretty much any chart at a glance and be like, yeah, dude, we know exactly where this is going, or at least a rough idea, so we can take a trade out of it. And that's where, guys like us can sit here with a dang near 96% accuracy rating every week for all the stuff we look at. I mean, that's huge. That adapts with the market. So I can see the space is kind of not necessarily getting crowded, it's consolidating, but at the same time, there's some changes happening in the financial space that are going to really start making some waves here. And this year, I think we're going to see a lot of that come out of the woodwork. That's why I'm going to be interested in reviewing some other platforms as well. So stay tuned for that. I'll be making videos on the subject as well too. So
Very cool.
gonna be some fun stuff. And then lastly, if you got a minute, I'm currently building some stuff with an interesting leveraged ETF that has been a lot of fun to wheel trade for me. Choppy as that chart is, I mean, this is something where if this was an equity, I wouldn't touch this. It's choppy and nasty. The premium amount that I get on the options chain though is beautiful. And I've been able to stay so far ahead of cost basis on this thing, even though it was declining over this period here. I'm so far below the cost basis on this thing, I don't have to care because the premium's going to offset that. What I'm talking about is once we get into leveraged ETFs and we start building wheel trade strategies into them, it becomes something where you've got to be a very active trader. You got to know your stuff. So it's definitely not for the beginner. However, I do notice that over time, these leveraged ETFs, they tend to, by design, be heading for zero. They do depreciate with time. If you can make premium that stays ahead of that, cool. And if it's worth the offset and percentage of loss over time versus short-term returns, great. Going into stuff like TSLT and some of the leveraged ETFs that you offer in your family, if it had the options volume, I'd be doing exactly this with it.
And we're trying to get, we're trying to work on the spreads, we're trying to work on the volume, trying to get weeklies, all that stuff. And actually talking to a big options market maker about making a strategic investment, in the firm itself, which would more incentivize them to tighten up my spreads.
And that's the exact point. So like when that happens, you end up being able to have an opportunity as a trader when you're really good at price action and really good at options trading, being on the sell side of options. You literally ride that coattail of exactly that. So I wanted to kind of bring it up because it also depends on the retail trader side of things. If you go and you talk to your broker, hey man, why can't I have weekly options on this? They do tend to look into that stuff, and it does.
But the thing is, it's got to come from the broker,
Right.
So I can get quarterlies going. I can't get weeklies going. A broker has got to request weeklies. So that is an important point. Because if I could, I'd just snap my fingers and tell people to do weeklies. But it's got to be requested from a broker.
Right, and that comes directly from the people utilizing the broker. So if you start, setting up some limit orders on there, it gets noticed. And I'm trying my best on my end to do that. But I'm one guy. And, I know if we have enough viewership here and you get enough interest in trading something like that, and you literally ride on the coattails of a market maker to be an option seller, dude, it's a glorious place to be because I can maintain massive percentage of returns on something that's depreciating like TNA here. pretty easily. I've got a log and I post it every chance I get when I'm making changes to it, whether I'm selling to open or buying to close options. I produce a list of that I put out to our members, just kind of keep them in tune with it. And I'm so far ahead on this thing. It's not even funny, and it's really not a lot of work. You don't even have to be that great at it to maintain profitability in something like this. And that's what I'm working towards, is building retail traders and into being able to trade like a market maker or be an option seller. And I coined the phrase a while back with Jamie Rogozinski. I would love to be able to teach all the apes to be gorillas, and that's essentially it. A lot of people got into some of those meme stocks. The options premium on those things were just, I mean, stupendous. That's an understatement. You look at GameStop premium back when it was running up. I mean, if these guys would have even had a remote idea on how to sell options on that, about 80% of the people who chased it on the Reddit pages would be in the seven-figure area easily. And that's not a lie. I mean, that's absolute simple math. If you got in early on that and you sold some way the hell out of the money options on that thing, you would be just rolling in profit. And that's the kind of thing that can happen with a leveraged ETF very similarly. It just needs volatility. A few moves here makes absolute chunks of change on those options premiums. And if you're even remotely decent at it, you will make a profit. Even if you're somewhat bad at it, you can still make a profit in that. You can very loosely trade those things and make a killing on it. And you're literally just trading like a market maker. So just wanted to kind of talk a little bit about that, and not necessarily put any pressure on anybody, but man, I see opportunity, and your leveraged ETFs are very efficient. They don't diminish like the others, so I do like that.
Here.
Anyway, I think that's a wrap, man, and I'm looking forward to next week. I think we're going to see a little bit more volatility coming in the market, and
I would think so. It's we got earnings season, gonna be fun.
And we know for sure we're going to have a lot of opportunity to crack wise at Cramer, so that's what we're here for.
Always is, yep.
So anyway, we'll see you guys next week. Thanks for joining us. Be sure to tell your friends, like and subscribe to the channel, and above all, you get a community with us. So if you reach out to us in the comments, we do talk back, and sometimes you get comment chains going where other members or other viewers are talking to each other, and that's what a community is. Whether it's within our membership or outside our membership, you're welcome to hang out with us, dude. Shoot us any comments you like, even if you just want to shoot the breeze and tell us the time of day. Anything goes. Thanks again.